Yesterday was a wild day on Wall Street, and the market gave back a third to a quarter of the gains from the historic rally the day before. It's partially because the market went up a little bit too fast, too quickly from the day before. It was a tactical bounce, in my opinion, an oversold bounce that doesn't really have real traction. Um, yes, although we suspended and paused tariffs for 90 days and lowered to 10% tariffs on all other countries other than China, the fact that we ramped up the tariffs on China to 125% and then 145% shows that our effective rate amongst all countries for tariffs is still in the mid 20% because of China's outsized influence being 145%. So this shows that the end of the negotiations and settlement is still far away. Yes, China came out this morning saying that they're retaliating from 84% tariffs to the U.S. To 100 to 125% tariffs to the U.S. It's not as high as the 145% tariffs, so that's good news. And they also signaled that they're not willing or would like not to raise tariffs further. This is likely going to be the ceiling for them because any other tariffs really doesn't make sense. It would be mostly like a joke at this point. So, look, although this might be the ceiling for tariffs on the China side, this doesn't mean that we might raise tariffs even further to Chinese goods. It's possible. Obviously, we have to see. But although this might be the ceiling, this doesn't mean that the negotiations are anywhere near done. These tariffs could stay on for a decent amount of time, if not indefinitely. And until both sides really agree to talks, I really don't see a break to all time highs anytime soon until that happens. Maybe, China did say that this is their ceiling, so that's good news. But we really need to see. We really need the White House and Xi Jinping in China to really speak and at least have an open dialogue, saying they're willing to negotiate. So until that happens, although I'm not sure if the lows are in, it's likely we'll go lower. But if not, I expect a lot of volatility the next few months. I mean, even good CPI data from yesterday that was less than expected, and PPI inflation, producer price index inflation, that came out lower than expected, and a decline of 0.4% month over month, and then core was a decline of negative 0.1% month over month too. And then the year over year numbers were less than expected, so that's good news. But even that wasn't enough for the market to rally this morning. And yeah, we also had the House passing a budget resolution. Even that wasn't enough for the market to rally. So until we have more clarity on these trade negotiations, especially with China and the rhetoric dialing down, I expect some choppiness in the markets.